Dear friends, welcome to Shasha's virtual classroom. So today we will be discussing statement of financial position. So we will be this is very important class. So please have patience and focus on this. It's very important. Okay. So statement of financial position. Financial position in 5 steps. So first step it's non-current assets by default. Okay. So non-current assets. First, you should understand what are non-current assets. So, you have to make a list of non-current assets. The trial balance would have been given. So, from that, you have to make a list of non-current assets. So, what are the non-current assets? Non-current assets are those assets which are intended to use in the business for a period of more than 12 months. For a period more than 12 months from the date of financial statement. So, very important. Okay. So, non-current assets are those assets which are meant to be used in the business for more than 12 months from the date of financial statements. So, what are financial statements? Income statement, statement of financial position, and cash flow statement are known as financial statements. So, basically, here, what all is included? So, you have to prepare the list in such a way that most permanent ones are written down first. For example, land and building. Land and building. How many years do you use land and building? Maybe forever. So land you will never intend to sell. Normally you will never intend to sell, and building maybe you may again you may change it after maybe 15 years or 20 years, or maybe after 25 years or 30 years or something like that. But land will never be. It's not intended. So it is more permanent. It is most permanent. Then what is the next one? Next one is machinery. Okay, so plant and machinery. So plant and machinery, maybe you can use it for at least 10 to 15 years unless there is any technical changes. So the next one. So then comes vehicles, motor vehicles or vehicles. So because you will be using them for a longer period. Then comes furniture. So, non-current assets are those assets which are intended to be used in the business for more than 12 months from the date of financial statement, and they should be written down in the order of permanency. So, first land and building, then plant and machinery, vehicles. So, based on whatever the items the business has, based on that, you have to use your common sense and you have to prepare the list. So, that is the first step. You have to prepare, you have to write down the list of non-current assets. Then second one is current assets. So what are current assets? Current assets are those assets which may vary. So immediately after 12 months, if they say in the very next day, they may change. So they are inventories. So what are inventories? Inventories are merchandise which are lying in the business after the on the date of preparing the financial statement. So inventory. So that is one thing. Then trade receivables. So what is trade receivables? Trade receivables are credit customers. Credit customers from whom we have to receive money. So to whom we have sold on credit and we are supposed to receive money. And the third one is cash and cash equivalents. Cash and cash equivalents. So what are cash and cash equivalents? Cash and cash equivalents means it can be cash in hand, cash at bank. So maybe those fixed deposits which are immediately which can be immediately materialized, like very short term cash deposits. So all those are cash and cash equivalents, particularly cash and bank balances. So we have this order is important. So it is recommended that the order of these assets should be in this particular order. So again, the items are based on the question. So whatever details have been given in the question, based on the items that have been given in the question, so the current assets list of current assets should be prepared. Then third one. Then third one is current liabilities. So remember, this is with regard to financial statement of sole traders. Okay, these are with regard to a financial statement of sole traders. Because when you are preparing financial statements of company, the format is entirely different. The format is entirely different. The items, the items are same, but the headings are same, but they have to be shown. That the form of presentation is entirely different in case of companies and other entities. So be careful. So this is meant only for sole traders, and you have to learn this. You have to learn this how to go ahead with this preparation of statement of financial position, current liabilities. So what are current liabilities? What are current assets? Current assets are those which change within a period of 12 months. Inventories today, inventories may be something else. Tomorrow they may be something else. You keep buying and selling the goods. So similarly, trade receivables. So you keep selling, you keep receiving the money, so they will not be same. Cash also, cash will be receiving and paying. So that's why this will not be same. So because of this, or because of this, all these are, what do you say? They are dynamic in nature. They are dynamic in nature, means they keep changing. So this is another way you can remember. You can just use your common sense to identify and make a list of current assets. What are current liabilities? Current liabilities are, see, trade payables. Okay, so what are trade payables? So credit suppliers. So you have purchased goods on credit, you have to pay them after some time. So maybe after 30 days, after 35 days, 40 days, 45, whatever. So you have to pay immediately. It is payable within a period of 12 months. So this also within 12 months. Okay, so trade payables. So again, what is the bank overdraft may be there. What is bank overdraft? You might have made arrangement with the banker to take money for a shorter period. So that is what is bank overdraft. So then what you have to do when you are preparing the financial statement. So remember, first you have to write non-current assets. Non-current assets you have to write. Then you have to write current assets. Then current assets, the figure total. So then this one again, no, current liabilities total. So what you have to do is you have to find out current assets minus current liabilities. You have to calculate current assets minus current liabilities. So that is called working capital. So what is current assets minus current liabilities? So 2 minus 3. Though you are not required to write what is working capital, you don't have to write this. This is just for you to remember so that you don't mess up when you are working out the answer. So always remember 1, 2, 3, 2 minus 3. So whatever amount comes, you have to write here. Then fourth one. So non-current liabilities. So what are non-current liabilities? Liabilities that are payable more after a period of 12 months from the date of balance sheet. Okay. So more than or after 12 months from the date of balance sheet. For example, bank loan. So bank loan normally when you will pay, you will pay after a period of maybe you may pay after 2 years, 3 years, or it may be even pay 10 or 15 years also. So that's why it has payable after a period of 12 months. So what is the example, best example for this? Maybe you have taken a bank loan. So maybe you have taken long term loan for many years. So which has to be repaid after a period of 12 months from the date of statement of financial position. Okay. So then even that you have to add. You have to add this. You have to add all this. So you have to add bank loan, long term loan. So you will get one figure. This item you have to subtract. You have to subtract from this, and this is called net assets. Net assets. What are net assets? All working capital minus working capital. So net assets are nothing but non-current assets plus working capital minus non-current liabilities. What is working capital? Working capital is nothing but current assets minus current liabilities. So very important. Don't get confused. Don't confuse yourself. Very important. So first we have to find out non-current assets. To that we have to add working capital. So what is working capital? Current assets minus current liabilities. Current. Okay. Current assets minus current liabilities will give working capital. So from that again you have to subtract non-current liabilities. So that gives net assets. So then the fifth item. The fifth item. What is the fifth item? Fifth item is owner's equity. Fifth item is owner's equity. Okay. So what is owner's equity? Capital at the beginning add net profit so less drawings. So the net amount will be the capital owner's equity. Okay. So that net amount will be owner's equity, that is the capital. So ultimately this should be equal to net assets. So finally Finally, net assets is equal to owner's equity. You have to follow these steps particularly in this particular order, specific order. Just follow this. You can do any damn problem in statement of financial position as far as sole traders are concerned. So you will just work out one another problem, one simple problem to demonstrate this, how to find out how to prepare statement of financial position. Till then, have a good day, goodbye, good night.